Hi everyone, welcome to Stars and Startups podcast with me, Varun Bumidi. Every week, I release 2 episodes where I have illuminating conversations with founders, investors, and doers. On this episode, episode 25, I speak with Sameer Verma of Nexus Venture Partners about some of his investments, the startup ecosystem, and we also get a chance to dig deeper into how he thinks about investing. More recently, though, Sameer's investee company Postman, which was in the news for putting India on the map, for creating a category defining unicorn. That's right, it's a unicorn. Do listen into the episode in its entirety. There are some fun anecdotes in this conversation. But if you have limited time, we discuss 5 of my favorite investments of Sameer's portfolio from minute 46. In his investments in Hasura, Postman, Bira 91, Licious, and My Upchar. Don't forget to subscribe to the podcast on YouTube or on your favorite podcasting app to stay informed when we release new episodes. And if you like emails better, then check out starsandstartups.com. Okay, let's get to this episode. Hey Sameer, welcome to the show. How are you doing? How's lockdown treating you?
Well, not so bad. Thanks for having me over. I think lockdown is, I think it's been great. If you ask me, I've been just about as productive. You know, Luckily, a lot of activity on the portfolio front. So I've been, deeply focused on the portfolio side. The downside is that on the new investment side, at least doing this over Zoom hasn't been as effective because in early stage investing, you are pretty much very dependent on meeting people and talking to them, sitting face to face. Picking up the small nuances. You obviously can't do that over Zoom. So I'm still learning how to do this over Zoom. So I think from a new investment perspective, it's been a little slow. But I've been very busy on the portfolio front with companies raising capital or getting to the next stage. So we've been very 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 focused on that. And good thing is also that it's this has been a forcing function for all entrepreneurs to think about the real basic things and getting the plumbing right in the companies, getting the model right, and really thinking about what makes sense or not. And I think so. I would say it's been a great wake up call for some of the founders who just had wrong assumptions around the business, or we all had around the table wrong assumptions. Obviously, there's uncertainty around where this will land up, and what's going to happen in the future. But I would say that personally, I feel it's a good thing because I think companies are focused really on the basics now, rather than building castles in the air in some ways, right? So that's the good part. And new investments, as I said, is I would say has taken a little bit of a hit there, but I think it's a matter of time. Part is I'm getting to spend time with family. I mean that's I missed seeing my daughter grow up. I unfortunately couldn't spend as much time as traveling like crazy, working really hard. I do the same thing now. I have a 1-year-old, so the good thing is I get to spend a lot of time, and I'm actually seeing him grow up right in front of my eyes. Right, so it's pretty fulfilling from that standpoint. So I'm actually liking it, and I'm also taking some time out to kind of focus on health and
Nice.
yeah. I think
Have you signed up to any one of these online fitness classes? Are you doing 120 push-ups a day now? What are you doing?
So I have despite the lockdown and all my my wife hates it, but I have a fantastic trainer. He still shows up, and so I've been working out pretty much now about 5-6 days a week. So he comes over and he pushes me really hard. So yeah, I have been now obviously starting to get back into shape. I just let go, and that's one of the biggest regrets in life. So I'm just starting to get back into form, and so I've been doing it pretty rigorously, and pretty much made a gym at home. Converted one of the terraces in my house with a shed into a sort of a gym. So I end up getting up early in the morning, and he comes over and he really pushes me. Yeah, so I haven't done 125, but I've done 100 push-ups.
I mean,
today. If we want to talk about it.
So, I mean, the fortunate thing about being in Bangalore, I don't know about folks in Mumbai, you could actually have a terrace and have a full setup there. In Bombay, you're probably going to pay through your nose, and you need another apartment for that.
Absolutely. Yeah. No, I feel very fortunate. The space is relatively cheap, and the best part is it's very, very pleasant, and it's beautiful in the morning to do this. It's the first thing, getting it out of the way. Then the whole day you feel energized and good to do one thing.
The interesting thing though is, like you brought it up, a lot of people are forming new habits, right? One is on the personal side. Obviously, it takes 72 days to form a habit. Now, you know, COVID has given us 120 days to do that.
Right.
Right from the business side, obviously Zoom and a lot of these work from home hacks have seemed to become part of their daily life. So I think people now, when they say they work from home, it'll actually be work from home and not figuring out how to work. And
yeah, I think it brings together a really, really radical prioritization framework. I mean, in our lives, about what we want to do. I mean, if this goes on for a few more months, I think people will look at life and it'll be good. I think people will go back to some bit of old habits and some social things, but they'll be able to cut through the noise. And if they're with family and everything, I feel that they'll be a lot more focused around what they want to do in their life and how they want to use time. And they'll realize that, they don't need to get onto a plane to just attend one meeting in person. A lot of it can be done, remotely. And they're just about as productive, right? And it's not only one person, but it's the other side also. The habits are forming across the board, right? So, I'm not saying that travel is going to stop, but I think people are just going to focus on more experiences rather than just material possessions. I think that's one big realization also I'm personally having, is that, I just want to, if I would just want to buy experiences rather than material possessions. I think it's that I was anyway not very materialistic, but now it's even more so. I'm not really bothered about what car I drive or things like that, but I would truly enjoy a nice vacation now, and I would truly look forward to it. And that's what it is. So.
It's interesting you bring that up, because I think one of the conversations people are having is that the value somebody assigns to life, mortality, is so different now than it was, say, last year, right?
That's right.
Sameer, before we get into some of the cool things about investing and life as a VC and all of that, you were an operator, right? You were actually a product manager. You're working in tech in the US. How did the transition happen from that? Did you always want to get into VC? Was there something you had set your sights on? Because people want, like, after 30 or 35 or 40, they want to become an investor. Was that something you always thought about?
Always, even as a kid, I always wanted to be doing something which is not in a very big company. I wanted to be, sort of very independent. And, I was always very anti-establishment by nature. Even as a kid, right? If you look at, in school, and I was pretty naughty and doing all kinds of naughty things. And, I was always very anti-establishment. And so I did my run on with it, right? And I focused on learning as much as I could during that phase. So when I got out from college, instead of taking on a big company job, I went and joined a startup. I did something very, very crazy, and I did it in the most crazy times. I graduated in 03 undergrad, and it was a pretty crazy environment, as you can imagine, right after the dot-com bust. And then I'd done my internships across big companies, startups, and things like that. And I wanted to work in a place where I could take on more, learn a lot more, rather than being in a big company just so that there was a brand value and it gave me something to write better on the CV or whatever, right? So I was pretty convinced that I want to do stuff where I get to learn more, and there's a lot of headroom to grow. I think that was kind of very critical for me getting out from college. So I did that, and and every step of the way, I just used every bit of experience that I had in that time frame to do a lot of soul searching to say, what do I really like? Went into roles which challenged me and gave me a broader vista rather than being in very confined roles. Should go into B school, and I obviously I got an idea of what business was. I had seen tech, and of course at that point of time, Google and all those companies were just about coming about, right? I mean, they're starting out, and you're seeing the whole consumer internet piece also. Some of the companies coming out. But of course, telecom was a very secular wave in India. And when I was back here in India, I'd done a lot of stuff around wireline networks, and I said that, okay, if I really want to do something in computer networks, telecom, and this space, I need to get a good footing into how wireless networks work, because I just realized that wireline is not going to be the preferred access for majority of India, right? And that's when Ericsson came calling, and and I fell into the trap, which I never will fall into in my life, was that they're a much bigger, better branded company, and if you work with Ericsson, then it's like the Goldman Sachs equivalent of the telecom world, and it's really good for your career. And my dad would be more proud of me in some ways, right? And so I made that transition mosaic end of 2005 to 6 after working for 2 years at UT Stockholm. And one thing I learned when I went there was it's a great place. It's a great place if if you like it slow, if you like structure, and if you just want to work on one point of thing. But if you want to take initiative, you're a go-getter, and you really want to move fast and do things. It's just a place which it's like a tar pit. The harder you try and get up from it, the more difficult it becomes to kind of do things. And it works. It really, really works. And there's a reason for why they are there and why they're great in their own ways. So I really, I saw the whole wireless transition piece that I moved from being a product manager to a solutions architect. And that was even at a more meta level, because you're tying up many products into what a solution should look like for a large telco who put hundreds and millions of dollars into capex, right? So you really have to work with different stakeholders and different providers, and you abstracted away from products into what a solution would look like. And that journey from UT Stockholm to Ericsson taught me two things, right? In terms of how does technology solve business problems, and how should it be viewed for doing that. It's not a point solution. What you're doing as a product manager. The other thing it taught me is that I don't want to ever work in a big company, and I found it very confining. Just around that time, being a solutions architect, what you do is essentially, you look at different companies whose solution you want to incorporate into an entire offering for the customer, right? You're integrating different kind of solutions and saying, okay, I will form the best mobile TV solution for you. Here are my encoders and storage, but here is the CAS or a DRM solution that you need to use, and this is a third-party solution. But yes, we can integrate it, and this is the scope of work and all of that kind of stuff. But eventually, you'll have a great mobile TV, best-of-breed mobile TV solution, and this is what the business case for that would be, and all of that kind of stuff, right? So essentially, it was great learning from a meta level, and gave me more business jobs. But what it also let me do was look at some of these point solution companies, which are startups, which are best of breed startups, right? And one of the things that I was told was, are these companies going to be sustainable, that you're proposing them to be a part of this entire solution bundle? And when somebody told me, look if they're VC funded. So here I was 23, and I would look at these companies there. This is an interesting solution. But then I would go to the investor page, and I would see these really fancy people. These are this firm, Sequoia has funded this, or Kleiner has funded it, or Mo Devrov has funded it. And that's how I started learning about, this is what VCs do. Okay, so VCs back really these early stage companies, and they are best of breed point solutions. And that when they say that, is this a sustainable backed company or a venture backed company? So that got into my vocabulary, and that piqued my interest. Okay, this sounds like fun, because they're doing technology, they're doing finance, and they're really involved in building things from like this really early stage phase. And I read a lot more about it, and I started doing my CFA at that time. So here I was, a solutions architect at Ericsson. I had a lot of time, because the company worked like an elephant, and in its own pace, surely, and they worked in their own way. But I got time to do my CFA level 1 in that 1 year, and I learned a lot about venture, and I was like, okay, I need to do this. I definitely want to go to B school, because I saw everybody had this chapa of a good B school, and I'm going to go get this, and I want to do something in venture. And I applied to a bunch of places, right? I won't name companies. I won't even name some of the people who I talked to at that time. They asked me, what a term sheet looks like? What you're talking about? You're not from McKinsey. We need people from McKinsey. We need consultants, because this was really 2006, 2007, when the venture industry was literally, I would say, starting out in India, right? And their preference was, because Pulak Prasad and all those guys from from McKinsey made the Airtel investment. Everybody's at that time was like, the McKinsey consultants are the best guys. And here I was a techie who was, okay, I could talk tech and I could talk business to some extent, very, very limited extent. And I had a CFA level one and I was an engineer. And they're like, what the hell is all this? Get out of my office. So,
so you didn't fit the mold, basically, right?
I did not fit the mold, and I did not fit the mold. And I said, okay, I'm going to try really hard to do this. And I had, and of course, there were other companies which reached out to me at that point of time. Do a tech role, much bigger, better companies, better paid companies. But I said I wanted to go into venture. I said I'm going to take a risk. I don't have much to lose. God was very kind. I was never very money focused. I've never been money focused in my entire career in terms of how much I make. What I was telling my mom this morning, I've never thought about how much money I make. It just happens. Whatever happens, happens. And so I made that transition because at Ericsson, Reliance was one of my customers, and Reliance was starting out. They had a private equity arm under Reliance Capital, and they were starting out a venture arm. And Reliance obviously did a lot of stuff around computer networks and telecoms and things like that. And I said that this is a great opportunity for me to go out and start learning about this. And Reliance would not be as finicky and as crazy about whether you're a consultant or not. You can talk the talk and walk the talk. That's what matters. And I think so. I was quite had my ear on the ground as I was surveying how to get into the space. And luckily for me, I went through a couple of interviews with them and their vice chairman and all of that stuff. And I was a part of what they in 2007 started. I was in Ericsson for a year, and they started something called Reliance Technology Ventures. I joined them in 2007 as a second employee, pretty much their founding employee. And I made that transition from, in that 1 year of Ericsson, from learning about venture, learning what people do, learning about, my basics of finance to some extent, and into venture. It was a very unorthodox move, and my dad freaked out that, why are you working with Reliance? What is wrong with you? And I said, I optimized for, and I realized after Ericsson, you can have all the pretty names on your thing. It's what you do. It's not where you do it at. It's what you do.
I'm surprised your dad said, why would you work at Reliance? Because I think most parents would think Reliance is a good place to be at. Why?
Not really. Not really. I would say that, and I tell people this, people are like very crazy and they look at me very strange because, most of us VCs are very brand. I won't say the next word, but they are brand, whatever. You know what I mean. Right, so they really are focused on where did you go to college and what did you do and all of that kind of stuff. And some of those power of association is very different. It's not what you've done, but it's more about they're drawing parallels. You should be capable because you went to an IIT or you went to a Stanford or a Harvard or whatever.
But those are checkboxes. Those are checkboxes.
Yeah,
saying that
exactly.
Life has basically chosen all this for you, and hence it makes our job easier to make a bet.
Well, life never chooses anything for anybody, but yeah, you did all the work to be running the rat race, and you
got the label.
The fact that you got really strong legs and you're a rat, and I always took a very unconventional path in my career that I would take on risks and I would not worry and I would do what I wanted to do.
What was your biggest learning at Reliance? So that was your real first VC role?
So I was 26 when I started doing venture. It was very early in the day for the ecosystem in India.
Yeah. We had Alok weeks ago on the podcast, and they started at this exact same time as you did in venture, right? They started Ixigo at that time.
Yeah.
So he shared his story about, hey, that time people didn't understand what, a lot of people were doing, but there were companies like Yatra and others. All the OTAs raised money because at least the general thesis was there around, travel, right?
Yeah, and in fact, Yatra was one of the first companies that this entity which I joined funded, in fact. So, that's how it started. This entity started that, hey, Reliance needs to start funding the next generation of these consumer internet plays and tech companies and all of that stuff. And, we are going to be deploying billions of dollars into capex, and we really need to understand, should we take warrants and shares into companies that we are investing into, because the scale with which we can operate, we can we can really make a company's fortunes, right? In some ways. So that was the thought process. So this entity, Reliance Technology Ventures, was supposed to do that, right? So the transition from that, I was 26 years old, and um, I went from being a solutions architect to being on a board of a company with the CTO of Ericsson with that entity, because my first investment was in a company called eBand Wireless, eBand Communications Corp, which is a San Diego-based company, and they were building next generation millimeter-based backhaul systems for telecom networks. So I made that transition in my career from being a solutions architect to being on the board of a company. I was only 26, and so you can imagine that it was a very, very different time, right? A very, very different thing. Nobody prepared me for what a term sheet looks like. Nobody prepared me for what preference shares are. Any of that stuff. I had jumped right deep into the. I had jumped to the deep end of the pool with a bunch of sharks around me, right? So this was pretty much, and I had to stay in the water, right? So it is great learning. I think that I look at that entire phase. I worked like probably 12, 13 hours a day at least, all of and then so it's been the 2 or 3 things. Venture industry was young, and we were in the most exuberant times that you can imagine. 2007, starting out venture is like coming to the party when everybody's drunk, right? Learning, I just feel that those 4 years of my time at Reliance were the most foundational learning points, because the amount of responsibility I got to take for being a 26-year-old kid. Nobody in the world would have trusted me by giving me the money. I had very little, no supervision. I learned on the job, and I learned to understand how things go bad. I mean, when you see it up front and you have very little air cover in some ways, you realize how things can go wrong. And so at the back of your mind, all these things, 2008, 2011. Sometimes things were bad. 2015 things were bad, and now this entire crash. So it's a sort of a pattern that it's sort of a muscle memory about how do you look at things, and you'll have to live in duality around things. But how do you keep hyper rational around when you're building businesses? They have to go through some of these ways, because things which look good will get very bad, and when things are very bad, they will get good. So that equanimity with which you should approach investments and build foundational things in the company are absolutely critical. And I think that's something that you get to learn when you do this, and if you've done it for some time, you learn that. And if you look at the venture industry in India, most of it, the craziness has actually started in 2011, 2012, and we've been in an 11-year bull run, right? Most of the people haven't seen a crash. The people who are in the venture industry today haven't seen a crash. They don't know what a crash looks like. They haven't seen it be prepared. Haven't been prepared for it. But I feel very fortunate, because I've seen a close up front what it can look like, and what are the repercussions, and what it means. And I mean, I felt the worst I've ever felt in my life, having to veto a decision on having to fire people so that a company survives. At 26, 27, it was not an easy decision for me to make. I mean, just at that point of time. But
do you think?
You learn a lot.
Did it help you in the current situation? Like, what were you advising your companies prior to what we are living through right
now? You'd be surprised. In this downturn, I haven't been panicked about anything as such. It's pretty crazy. There were 1 or 2 companies where I was a little paranoid about that there'll be a fundamental demand change in some of those things. So we need to realign ourselves. So I was a little pushy around, because I did not know how things would pan out. I was actually thinking about the other day. I haven't got panicked about this downturn at all. In fact, I've been the most effective I've ever been in my last 8 years at Nexus in this downturn, because I've just been focused on saying that, helping the companies raise capital or change business plans and things like that. But I haven't got crazy around anything, because I think I've been able to see the fact that, okay, things are bad right now. As long as the company's not going off the rockers or has a really, really terrible business model, I think it's been actually, I've been surprised with myself this time around, that I've been very, very, broadly very, very calm on the whole about the situation. I think it's just maturity of seeing these 5 or 6 cycles play out. it's not the end of the world.
Sameer, we have a long way to go in this conversation with you.
Yeah.
So I'm going to get into the next segment. Understanding you as a VC, right? You're in that space, and I think a lot of folks look at venture and capital as something that it's a black box for a lot of people. Can you take us through the process of creating your thesis? Do you have a thesis? Do you look at how do you look at investing?
So the way I look at our business is that we have as venture investors, we have first class seats, first row seats to seeing how the future is shaping up, right? I mean, that's what we are supposed to be doing. So we are really seeing, we are about looking at patterns around, inflection points in industry, structural shifts in industry, value migration happening in industry. So we are really about understanding some of those things innately and always having a thing in our mind around how things are changing. Now, that might be written or unwritten, right? You develop a nose when you're in this business, and if you're objective about stuff, you develop a nose around, what are the possibilities and how the industry is changing and why a new business idea makes sense at that point of time. You also realize that timing is a very important part in any company, right? When I invested into this company in the wireless space, they were so out there, and I thought that this is the coolest technology ever, right? And I realized that doesn't mean jack. What matters is the business case going to make sense at this particular point of time? However cool the technology is, even if an acquirer comes in and buys it, it's going to take a lot of time for it to kind of make economic sense, for it to become mainstream and a large company in the 4 or 5 years. So my first investment in the venture space did not work out as a result, because there's nobody who told me that you should think about it this way. I learned about it the hard way, right? So one thing I learned is that you have to get the timing right. You have to get the team. The most single thing is you have to get the team right. And I think that is absolutely critical. To do, get the team right, the timing right, and the market right. I think these are the 3 things. I personally am somebody who doesn't sit and build a thesis around stuff. I don't. I am fundamentally opposed to that, because I'm again, if you look at it, they say, right, to a hammer everything looks like a nail. So if you build a thesis, then you have a confirmation bias around that space or that particular thing, so you can't look at things objectively, and you just feel like, I built a thesis that asset light medical healthcare is going to work, and this is my thesis why it should work, and everything. And then any company that you meet, it'll conform to that bias that you have, and your thesis might be biased. So you don't kind of look at it from a first principles perspective, and that's when you get it really, really wrong. So I don't look at it from a thesis perspective, but what I look for in companies is fundamentally at a fundamental level, it is around the people, and do they have the ability to be agile and adopt. I haven't funded a company which started off with one thing and has done one thing at the end. The only company which has been able to do that in my career of 38 investments is of course a beer company which has done a beer. I mean,
we'll get to the beer business in just a bit, because we have a whole segment about that.
Yeah. So of course that is done whatever it is, and of course if you leave it to Alkur, he would sell you clothes also. But that goes. Let's not talk about that. But the point I'm trying to make is that out of the 38 companies, I would say the only company which has gone ahead and done exactly what they told me in the first pitch to today is Postman, which is why I have the most tremendous respect for them, because the foresight that they had is very different. Every single company that I've funded, every single one of them has changed its plan. Every single one of them. So the team's agility and their ability to smell the room, smell the market, smell the industry, smell the situation, and keep adapting is absolutely critical. And the self-awareness is also very, very important.
What's the process then? Then in your case, then what is the process? Because when you, like you said, for someone who has a thesis, you're obviously then focused on, okay, how do I solve the problem, right? And then you can go after in the wrong direction, because you're looking for a problem or you're looking for a solution, right? In this scenario, you're basically saying that there is this whole world of startups and businesses out there, and one of them might be. So when does your ears perk up when you say, oh, this is something that's cool that I want to be a part of? Because then, because you're evaluating everything on the same level.
That's right. And you have very limited information to do it. don't forget that, if I'm reading a report about somebody wanting to change something in the future, if I'm reading a Gartner report, I'm pretty much toast if I'm doing that investment, right? Right? Just because then I'm building a Me Too, and I have all the risks in front of me with my capital to build a Me Too company, right? Girish can pull that off. I mean, Girish is exceptional to be able to pull that off. I have all the respect and love for him. But not it's not for every entrepreneur, right? To do it. So if just imagine, just put yourself in my shoes. What do I do for a living? I am sitting in front of 2 or 3 people with an idea about a market and about a space with no product, obviously no revenue, no Excel sheet, and I would say 80% of the companies that I've funded are without presentations, right? 85% of all the companies that I've invested into have been pre-revenue, pre-product. So it's really about studying the people. It's really about understanding whether the timing for that particular thing is right. Is it the right timing, and are these the right people who can solve it? And does this industry make sense? Is this going to be a large TAM? Is this going to be a large space? And is a large company going to be created if these guys build it up? Are there very asymmetric equations at play, right? So those are things that I'm sitting around and judging. But I'm not saying that, okay, I'm going to go out there and I'm going to build there's a health nutrition company, I need to invest because it's you intuitively know that people want to get more healthy and fitness is a big thing and all of that kind of stuff, right? You intuitively know that. So I've invested into a health fitness company, for example, and that happened pre-COVID. But it was, obviously it's got on steroids right now because obviously gyms are closed and all of that stuff. But just talk about it.
Do you think that will continue post-COVID? Like, I mean, a lot of these companies are seeing a lot of spikes, right? EduTech, food, nutrition, etc. Do you think this is like the sale period where everybody's just buying and then that it kind of plateaus at some point and then there's a new normal?
I think there's going to be a definite behavior shift which is going to take place. Depends on how long the reinforcement loop in some of these things is, right? It all depends on that, right? I mean, what's going to happen is clearly, I think there's already a very large population or set of people who don't go to gyms to work out, for example, right? That market is wanting to get healthy. So there is going to be a first step for them to want to get healthy, and that will only be digital right now. And then there is a gym goer market, which the people are going to gyms and they're not going to be able to go to gyms. So what will they do? If you go to Decathlon today, all weights are sold out because people are buying weights and doing things. Now, if this lockdown continues till the end of the year, you have reinforced a behavior of being able to do it remotely without much effort, right?
So the pie has become bigger.
The pie has become bigger. One is obviously a bunch of people who are going for walks and things like that, or were doing things, want to get healthy. So they will be okay, kind of, because they are, they will be okay doing, guided yoga on Hotstar, for example, right? Yeah. Or guided yoga on some of these things because they have realized that, health is very important and they need to make their immunity better and all that stuff. So there are a bunch of confluence of some really interesting factors coming together today to make some of these behavior changes happen. So I feel that people will go to the gym, but they will also be okay working out from home. If you look at fitness and transformation and what needs to happen, people will say, okay, I'll do 3 days at home and I'll go 2 days in the gym and I want to do heavy weights or certain equipment. I'll go there, but I'll do if I have to do conditioning, I don't need to show up in a gym, right? I don't need to do that in the gym, and I can just do it this way. So if this continues for a very long time, the behavior is going to be reinforced, patterns will change. And I think behavior will change. I'm not saying the gym industry is going to go out of business, but it will be that there will be a very large bunch of people who will want to be very health focused, and there'll be a new platforms which will cater to them, and even new behavior will be created in this thing.
Just stepping back into the process that you follow. Then when somebody reaches out to you, or somebody says, "Hey, this is a cool company," is that when you get excited and you're like, okay, let's explore, or you're constantly forming these thoughts saying, okay, this is something interesting or that's something cool, let's go talk to them and see if it actually results in more value, because I'm still trying to understand how does mind of Sameer work.
Well, you'll go crazy if you try to figure it out. I still haven't figured it out. But the way I look at it, one thing I've learned to train myself is I don't try and let other people bias my opinion very much, because the biggest mistakes have happened when I've done ref checks of people and people have given me bad ref checks or good ref checks, and their biases have been incorporated in my decision making. Right? The biggest mistakes in my career are those things also when I've listened to too many people. So I kind of keep it very, very open. I understand the thing. I will have a thing around, yes, this space makes sense. But I would, my only condition is going to be team when I meet the people. I want to meet the people or talk to them, and I want to see how they're connecting the dots. I have a very slow mind, and if I'm talking to an entrepreneur and he can make my mind light up, that's like, that is something, right? I would say in all the investments that I do, I know that my mind is racing very fast. And then I know that, I'm thinking really fast with this guy. This guy is somebody I can work with. This guy is somebody I can help build a company with. And this guy is connecting dots very, 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 very fast. And he's got the art of storytelling, but he's also got the arts of having deep insights into why he would do this. How would he take it into market? How would he build a business on it? And is he self-aware about himself and intellectually honest about what his gaps and skills are? And can he build a team around him? Those are the things that I'm trying to decipher, right? I mean, you have very, very limited information. I rarely go and read a report on that space that, I need to do this, or, I need to learn about, neo-banking for God's sakes. I would, if I'm doing that, I know that there's something wrong. I'm behind the curve very badly on stuff. It does happen, by the way. It does happen, but I lose steam in the process because I realize that I don't intuitively get the space.
So right? in that case, do you then let's say your investment in Postman, for example, do you then look for other alternatives to then understand the market? Saying, okay, now you've met a Postman or you know of a Postman, and now are you looking for similar businesses and then try to understand? Do you talk to 5 startups before saying yes to a Postman?
Honestly, in Postman's case, I was telling you that I told the entrepreneur that I would fund him 25 minutes into the investment. Right, I came a little bit more prepared into the meeting because Postman was a slightly different thing. It was a project. It was run by Abhinav. He was he was building this in a site as a side thing, and he was building websites for a living. And so it was very different, but there was enough community traction, and there was enough understanding that this can be an interesting space, and there was a real value migration underplay that the world is moving to REST APIs from SOAP. For example, there were these industry value migration vectors which were very clearly coming in, and clearly that people wanted a new interface, and there was a mental model, if you looked at it, that some of the complexity, if you look at it in great businesses, goes away when you take stuff which is happening on command line and build good wrappers around it, and you're able to do things like Dropbox was built on rsync, for example. Postman is built on curl. Curl were commands which were written on command interface, and when you do that, there's an opportunity to kind of build deeper workflow products. So I mean, there was some backdrop when I went into the meeting. I read a entire book on microservices. It was lying in my car dicky for a very, very long time. But I read an entire book, but because I had enough data points and I went into the meeting, I didn't know what to expect. But when I spoke to the entrepreneur, my mind was on fire because I just realized that this is one of the most exceptional people I've met in my life. Right? I think it's the same feeling I had when I met with Vijay, also Vijay Shekhar, which we funded after one meeting. I took one meeting with him, and by the end of the meeting, when I walked out, I said, "This is an entrepreneur that I want to fund." Right? So this was in 2009. So it just happens, that when just imagine, I think of me as a monkey, right? If you make a monkey do the same thing every single day, even a monkey can become half decent, right? So I'm doing this day in, day out. So my mind is so tuned on picking up the smallest nuances that the entrepreneur might not, in some ways, think that I'm picking that on, but I'm able to connect some of those things. Right. It's not because I'm a genius, far short. I'm the most average person you would ever find, but I've tuned my mind to be able to pick up things which it's just like developing a lizard brain. It's really only good for one thing, right? So it becomes like that. So and I think that's the important part here to think about that. So I obviously did study the landscape to some extent, but I was blown away with the entrepreneur and how he was connecting dots and how he had a very, 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 very clean vision in terms of how a simple testing tool would evolve to being a large workflow tool. And how would he build that? He had a very clean outline around how he would do it. The clarity of thought that I found was at another level, right? And which is what made me tell him in 25 minutes, I'm funding you, right? I mean, whatever happens. And I told you that we didn't do an IC on that particular investment, right? In that particular week, we just ended up closing it without, even the team meeting them. It was so unusual.
Sameer, do you think that's a career-defining investment?
It's an investment I'm very proud of. I would say, just given the fact that it's a company which is going to inspire a lot of entrepreneurs to build the next generation software companies out of India. So I feel it is a Abhinav will be a poster child in some ways for that entire world, for building world-class products that everybody talks and raves about. So I think, yes, I feel very proud of it. And the fact is that, there was no company when I invested in them. It was a project. The two founders were doing the other two founders were moonlighting, doing other things. And, so it was really putting it all together, really being in that initial part, helping them. So I feel very, very proud of them. And I think the world of the founders. I mean, they're some of the best people I've ever come across. So, I feel very good about it. I would definitely see, for me, one of the most career-defining investments. But yeah, in terms of returns, yes, probably there. I would say Paytm has been very, very good for me as well. And there are others in the works right now. Unacademy is another one which I would say is would be career-defining in some ways if we continue on the trajectory that we're going on. And Hasura and there are other companies as well, which I would say that I have tuned my brain over 11 years, now almost 13 years of doing this to be an investor and not to be a sector specialist. It's a very conscious choice I took, and that happened because when I got into this industry in 2007, I was doing Reliance Technology Ventures, which was only going to be doing telecom and semiconductor and really core stuff. And I realized that all those industries got wiped away after the crash. Anything which was heavy capex industry moved away. I had to reinvent myself 2 years into the venture thing. I didn't go to B school because I said, okay, I'm going to reinvent myself and learn. I said, learning by failing is better than doing an MBA. Whatever people say, I might not have a Harvard. I potentially could have gone to Harvard, but I might not have that. But I said that this is learning and changing businesses in the midst of this downturn will teach me the most. And I had to reinvent myself, and we had to reinvent a firm 2 years into its inception to now then move from Reliance Technology Ventures to Reliance Ventures, and then we started doing a bunch of things in healthcare and other sectors. And then I took it on myself. I said I will be a broad-based investor. I will not be a sector specialist. I will not only say I do SaaS, but yes, I can do SaaS. I can do this. All I look for, and which is why I say that I look for entrepreneurs who are defining things in different spaces, and that's why I take a very broad-based approach and a very fundamental first principles entrepreneur, market, and timing approach. Those three things kind of working in the confluence of those to see how those three things can come together to kind of change and move things. Which is why I've been if you look at my typical day, it starts from co-living, goes to dev tools, goes to doing stuff in edtech, and then goes towards grocery and and then will go towards hiring. So it's a very.
I'm sure I'd love to pick your brain more on like your fortnightly catch-ups and whatnot. But what I'm really keen to understand is that when you look at success in the VC world, right? It's a long play because your success is not just like an entrepreneur success. It takes 5-10 years for any business to mature and actually pay off. How do you keep yourself motivated in that time? Because every investment, you don't have the answer overnight. You're not going to know, like, okay, tomorrow you got like 100% in your exam. You don't know that.
You don't know. Even the companies which are multi-billion-dollar, investments, you don't know. I mean, you don't know till the money comes back, and even after that, our job is honestly to build enduring companies. A lot of times, I can tell you that there are companies that have made good returns on. But I know those companies are not enduring because they didn't have the fundamentals of building a great business and building great P&Ls. Right? That's not happened. So the only way to motivate yourself is constantly being a heat-seeking missile for meeting very, very smart entrepreneurs. I think that's the only thing. I would say the way my brain lights up when I meet a very, very good founder, I think that high is better than any high that you can ever ask for. Right? I mean, it's the sugar rush, or the rush that you get in the brain when you meet an exceptional founder. For me, makes the entire journey worth it. And of course, it's very spiritual, and it's not about funding and press announcements. And a lot of my investments are not stealth right now. So it's not about those things. Those are also good things because it does good for your platform. So you need to announce them. Yeah. But if you ask me, if you had me to have a choice, I would keep all my investments in stealth. Right? If you ask me to do that, I would just be very happy to do that. Right? But my thing is, the most important thing is being a part of the journey and working with some of these people as they're building out. It's a very, very satisfying thing. Right? It's an extremely satisfying thing for me to do. And just it's my personality. I have a sort of personality for an entrepreneur, but my biggest thing is maybe that I tell people I was dropped as a kid on a head, so I have to think on multiple things at one time. And I'm definitely not capable of running 3 or 5 or 6 or 7 of these ventures, right? So this is the way in my mind, how a conglomerate in my mind works when there are all these different companies, and then you're taking capital from investors who trust you and allocating capital into some of these companies, and then helping them really transform their space, their own spaces, and really being in the trenches with these guys, learning how that is done. So I find that very, very gratifying, right? I think that itself, that entire path and that entire journey itself keeps you motivated. Of course, there are challenges along the way, but the good thing is, if the one company is facing challenges, other companies also doing great. Right? So because you have a portfolio sort of a structure, you can always, you always have to deal with situations, and you realize that there's no great company which is built, which didn't go through its extreme challenges or extreme points of failure. Not even a single one that I've seen happen in front of my eyes, or in my 38 investments, which have been straight lines. It just doesn't work that way. There are near-death situations for all of them, and just being there for these people is great. I mean, the thing is, in our business, we're choosing the kind of ulcer machines that we want to deal with, right? I mean, that's what it is. Every company is going to give you stress, so you pick the ones that you want, and you pick the ones which are the most valuable and the ones that you want to really work with. I think that's what is deeply satisfying about the business. So it just fits with my personality. I don't know what else I would do in my life, right? I mean, that's what it is. I could be an entrepreneur and do stuff, but my thing is, I just personality wise, I want to do multiple things. It's just bad.